Joining us now is Sankey Research President and, of course, lead analyst, Paul Sankey. Good to have you here at Post 9, Paul. So, what is your overall, I assume you're getting a lot of questions. Got any answers for us in terms of what this is all going to mean for the commodities you follow?
I think the most interesting thing is the speed of the move here that we've seen in oil is actually as fast as we saw during the Russian invasion of Ukraine. So if you look at when I was last on May the 5th, talking bearish, we've had a 25% up move in crude prices. And as you know, recently the oil market hasn't been characterized by reacting to geopolitical risk as much as you would think. On this occasion, we're doing a Russia-Ukraine. So you have to ask yourself, why is that? As you mentioned, that obviously the operation's still ongoing and we don't know. So far, it seems they're not attacking oil infrastructure, so that will relieve the market somewhat. But the next question is, where's the spare capacity? How can we handle this if it is a major outage? And the first thing that we observed in our note this morning is it's not in the SPR, right? We've drawn down the SPR, and now Chris Wright, Energy Secretary, says it needs to be fixed. So that's your first option out. The second option, as you know, is Saudi, UAE. They both have a lot of spare capacity, probably 2 million in Saudi, 1 million in UAE. Then you add Kuwait, Iran, Iraq, you get another million or so, and you debate whether the million in Russia is real. So you get towards 5 million spare, but I just gave you the location of all that stuff, right? So it's in the Gulf of Arabia. And so the market, I think, here is pricing real fear about spare capacity, which is why the move's been so aggressive. Now the demand impact, the economic impact, all the other impacts, no attack actually happening. Obviously, the fear is going to be that we now collapse back down again. And the likely equivalent, we think, is probably the Saudi attack that occurred on Khurais, their major facility that took out 7 million barrels a day. And that was a relatively short-term impact. But what's interesting here, further to what I was saying last time I was on, is that the market is globally tightening towards less spare capacity. And so these OPEC increase announcements are being taken quite bullishly by the market because it's obviously reducing Saudi and others' spare capacity. A simple example would be that obviously there's no spare capacity in Kazakhstan because they're cheating so much. So it's a very interesting dynamic that the oil price has moved as much as we saw in 22.
How much does Iran ship in terms of oil right now?
The key focus is Karg Island, and it's about 1 million barrels a day, basically, to China. So it's significant amounts of oil, and we think the administration has been turning a blind eye. They haven't been aggressively enforcing sanctions in the way that they could because they want lower oil prices. So obviously this tape right now is a major problem for Donald Trump insofar as he's openly looking for lower oil prices.
Does the price change alter the equation for producers here? Would they get more willing?
It's really interesting because the thing we were talking about last time is that the producers have been very proactive in cutting capex early, and Saudi has cut capex. Saudi dropped rigs in the last week. So this is a very interesting dynamic about the fact that, no, I don't think there'll be a huge response to this move because it's such a huge spike and because everybody in oil is bearish on the fundamental balance as it appears to be very oversupplied in 2026. So, it's a very interesting moment here that we have this major spike at a peak time for global demand because of driving season.
Earlier in the week, the FT did a piece on how U.S. production might actually drop year on year for the first time since the pandemic. Do you buy that?
Yeah, I do. I think it could, and it's a huge moment. I mean, certainly we have major CEOs such as Diamondback saying that that's what they're anticipating, absolutely. And the capex cuts, as I said, as soon as we got to within 60, they were cutting capex. That's above their free cash flow levels, right? So they're very proactive, and so is Saudi. Saudi, I think, is very much preparing for downside by lowering their own capex. So this has come completely counter to where the market was positioned, including me.
Have we incorporated the possibility then of Iran attacking other facilities, for example, of the Saudis, or is that going to bring in, if it were to occur, would that bring another spike?
Yeah, I mean, this is the concern. I've heard from senior sources in the Middle East that Iran may have serious missiles up their sleeve. So we're sort of that clearly is a major fear that they haven't unloaded everything they've got. I think the suspicion is they have, that they really don't have, like Russia, they don't have a lot of military power in reality. But we'll see. It's very scary, obviously, because, I'm not here to say they won't attack. I'm sure they want to.
What about the Strait of Hormuz?
Yeah, that's obviously the major concern. I think Iran would know that all hell will break loose if they shut the strait. I'm sure Donald Trump is going to be forefront of that, unleashing of hell. But at the same time, we've had a range of major assassinations here and other stuff. I mean, this is a serious situation. It's a war.